Welcome back to the channel, everybody. I just thought I'd drop this quick market update for y'all. There's just a lot going on in the market these days, and it's easy to look at headlines and just start feeling panic and fear, and I don't want you to feel panic and fear. That's not a good feeling. So I just thought I'd drop this real quick and let y'all know kind of sort of what's going on. There is a very specific reason that the market has been selling off. So bottom line, what's going on. The S&P in the last couple of weeks or so is down 5%. The NASDAQ is down about 10%. Today we had a really bad day in the market, and Bitcoin and all risk assets, commodities are selling off, oil is selling off. And so I wanted to explain to you guys what exactly is going on so you're not freaking out. And essentially what's happening is we have what's called a Japanese yen carry trade unwinding. Now, I'm not going to go into specifics of what that is, but essentially if I'm a hedge fund and I see in Japan their interest rates are at 0%, and here in the United States interest rates are at 5%, then I might borrow Japanese yen and invest in government bonds, and basically you're getting an arbitrage situation. And a lot of hedge funds, they did this, and of course they took on leverage, and they really had to maximize those returns, so it was a tremendous amount of leverage. And this situation has been going on for a very long time. I think it's like 15, 16 years or something like that, that interest rates in Japan have been at zero, because the only way this works, guys, the only way this works is as long as the Japanese yen doesn't appreciate or interest rates don't go up in Japan, this works great for hedge funds. And of course, everything works until it doesn't. And this last week, it didn't work. So the Bank of Japan raised interest rates a week ago. The yen spiked, the dollar declined, and now we have a bunch of hedge funds that are offside with massive losses. And so what they had to do was, and this is why this is the problem with hedge funds, guys. I want you to pay attention to this. This is the problem with hedge funds. It's great when you're making money, but you can lose money like that. It's so quick. So you got to be very, very careful with hedge funds. But anyway, long story short, I digress. These guys are offside. They got to sell to raise cash because they're getting all these margin calls. The brokers are telling them, hey, listen, we lent you X amount of money, and now your position is way underwater. You need to put more money to make sure that it's, we're in the green, basically. So we have a lot of hedge funds who are caught offside. And so they're selling stuff. They're selling whatever they can get their hands on. It's just not just, bonds, it's, equities, it's tech stocks, it's, Bitcoin, real commodities, real estate, whatever they can get their hands on, they're selling it. And so we're having this massive move down in the market. And on top of that, it's August. August is not a good month if you want to sell stuff, because there's just not a whole lot of liquidity. Everybody's on vacation, right? We're still in summer vacation. So July, August, just really very little liquidity in the system, very low volume. And today we had a big sell-off, and guess what? It was on very low volume. That's because there's just not a lot of buyers for these guys who want to sell. And so they're just lowering and lowering and lowering prices. And so that's what's happening here, guys. So short term, I just want to make sure you all understand. I've been watching the earnings reports. Nobody's really, there are some companies that are missing earnings, but it's not terrible. It is okay. Nothing to be concerned about. We don't have mass layoffs. But on the note of layoffs, there's something that I do want to mention that happened on Friday. So as you guys know, I've been on a recession watch for some time now, and it hasn't happened. It's been very bewildering. Everybody else has gone into a recession, and we haven't had a recession yet. But maybe it just was delayed, and it is about to come. On Friday, there was a payroll report that showed that the U.S. economy created less jobs than we expected. And, that kind of freaked people out just because we've been beating those estimates consistently, and now we had a pretty big miss. And the unemployment rate went from 4.1 to 4.3. And now that clip is a pretty fast clip. And, in a few months' time, we could be at 5% or north of 5%. So there's some concern there. The economy is slowing. People are losing their jobs. It's not critical mass yet, so it's possible that this is just a head fake, and we'll be, I need more than one data point, basically. I need more than one data point, and we haven't had that yet. So I'll be watching that very closely, the recession stuff. We also had Warren Buffett. He has his quarterly release, and in that release, he basically reduced his Apple stake by 50%. So his largest holding was down 50%. Now, I don't know why he did that. His cash pile is like 270 billion or something like that now. That makes me think maybe he's onto something. At the moment, I'm just waiting for a few more data points to confirm. And, recessions can be pretty rough. They can be pretty brutal. I do want to mention that we've been waiting for a while for this recession, and a lot of the typical indicators that I normally look at for recessions, like the yield curve inverting and the economic indicators index and all that other stuff, it hasn't come through this time. And maybe it's because of the nature of the pandemic being so different from any other regular business cycle recession. A pandemic-induced recession is not something that happens every day. So maybe that's what it was. So I'm being cautious here. I would say cautious and yet optimistic, just because so far, inflation has come down. It did not cause a recession despite the high rates. So I'm playing it kind of safe, but a few more data points, and yes, then I'll be under recession watch, and then we're going to have to adjust our portfolios accordingly. But in the meantime, this one event that we're going through, this corrective event that we're going through, it's a liquidity cause event. I wouldn't be surprised if it's because of the elections coming up. Elections oftentimes it's quite volatile. So maybe we have a sell-off, and then in the next couple months, and then we rally back up, right? Like we always, like we often do at the end of the year. So that could happen. And of course, we're having client calls here in the next week or two, and I may have more information for you guys as I kind of get information. But right now, I just want y'all to know, hang in there. It's tough going through corrections. It's never fun, when you have these kind of wild gyrations. But nothing is fundamentally, at the moment at least, nothing is fundamentally broken with the market just yet. So, I'm watching it like a hawk, but at the moment, everything's fine. I wouldn't be surprised if we actually buy some stuff. If it gets really low, some stuff might come up that's pretty attractive, so we might end up doing that. So anyways, that's all I wanted to give to you all in this market update. Thanks for watching. Be good to one another, be kind to another, be authentic, be intentional. I'll see you next time.